Hey, it's David Capablanca. Ever since I got a little bit of following online, I've been getting some strange questions from people asking me about fair value gaps, swing high, swing lows. Like honestly, man, I'm a stock trader, specifically a small cap short bias trader. My edge is in fundamental and statistical research. So I focus on SEC filings, dilution history of a stock, float rotation, and reading level 2 and time in sales. And if you're new here, or if you came to this video because of the title, my broker statements and win rate have been verified by these notable firms. And I've won second place in an official trading contest in 2022. So the point is, after trading for 8 years, I've never really heard of those strange terms. Fair value gaps, inverse, FFG, blah, blah, blah. So I decided to look up who ICT is. He has a big following. He's got a lot of views, but also, that's not surprising. There are many expose videos about this guy. So before I formed a bias, I'm going to watch the videos, ICT concepts explained in 12 minutes. One of my members sent me this and asked me to review it. Apparently Casper, the creator of this video, is one of the many gurus out there who are teaching ICT strategies. Let's give it a shot. We'll see if these trading concepts actually make sense. Is ICT just a fraud, or maybe he was trying to teach his own way of trading? I'll share my honest thoughts and reactions to ICT. So join me, give this video a free like, and find out what ICT is all about. All right, so we're gonna check out this video.
Look, over the last few years, I have spent hundreds, and I mean literally hundreds of hours watching ICT's content. And through
Hundreds of hours watching ICT content. Over the years, you spend hundreds of hours. Man, these guys are slackers. Like over the years, like trading is so hard. You're competing against like the top smartest people in the world with a lot of money, and they're all looking to take your money. And if you think you're just going to have a few hundred hours, like all the knowledge that I've gained has taken way more than a few hundred hours. I say several thousand hours. But of course, that's not sexy. Of course, that's not going to attract the Lambo guys. Trading has a high failure rate. You got to do what everyone else is not doing in order to get successful at trading. And I'll tell you what the 4%, some studies say up to 96% of traders fail. And you know what the 4% are not doing? Those 4% don't just do a couple hundred hours over several years. Treating it as a weekend hobby, like you expect to like make money consistently, more than a surgeon, more than an architect, more than a doctor, more than a lawyer. Like you're looking to make more money than any of those guys, and with the least amount of work. It's absolutely ridiculous.
just put together a simplified guide of what actually matters and what you need to use day-to-day in trading, I would have been able to become successful so much faster. So that's why I made this video. I'm going to explain everything that actually matters.
Yeah, there's no lies. No lies detected as far as that. You know, it's like, you know, you're going to get profitable faster. That's why you need mentorship. That's why, you know, you gotta get the knowledge from somewhere.
In ICT in under 13 minutes, so you can focus on what actually matters, which is implementing the concepts into your trading. But enough of the chit chat, let's hop on a chart. First on our list is price, and the first section of price is going to be liquidity. Something you always have to remember is that price is always moving towards liquidity.
You gotta love the charts, man. It's just everything. It's like the same thing with the Forex traders, now with the futures traders. I don't know, man. It's like technical analysis, like upfront, like learning that like right away and like expecting to be profitable off technical analysis is a red flag. In the beginning, if you're trying to make money off technical analysis, like you think you see something that you're special and you see something that no one else sees, like you have this rare skill of technical analysis of cup and handles and double tops and triple tops. You know, it's like, that's not enough, man. It's a piece of the puzzle.
Whether it is moving towards internal liquidity, like a fair value gap, which is the gap between,
you know, it's
between a wick candle that has a big body, and then there's a gap between that candle's wick and the candle after its wick. That's a fair value gap, and that is also called internal range liquidity. External range liquidity can be any high or low, meaning any candle that
this guy is just seeing what he wants to see. That's it. You know, it's all this technical analysis jargon, and it's like when you talk to people, to idiots that don't know anything, you seem really smart, because you're doomed to fail if you have that mindset of you got to make money right away. You're going to be forcing bad trades. You're going to be coming up with patterns out of your imagination. You're gonna see them everywhere. It's like ghosts. Someone that sees ghosts. You're just like, you know, this guy, he has a name for everything.
Has a higher low on either side if it's a low, or any candle that has a lower high on either side if it is a high. So that is going to be external range liquidity, any highs or lows. So the market is always going to travel from internal range liquidity or fair value gap.
You know what's crazy too is people think they can learn whatever this guy's talking about by watching this video. Like, they got it. A 13-minute video. For example, in Friendly Bear University, I have like 1,000 hours and webinars almost daily, 2 times webinars sometimes, in-person events. Like today I'm filming, it's Thursday. Tomorrow morning at 6 in the morning, we got the Friendly Bear University students are coming to the US Bank Tower, and we're going to trade from 6 in the morning to 1 p.m., which is the West Coast hours. It takes like that seriousness to really start to like achieve profitability. Not a 13-minute video of this guy with no track record. He's just naming things.
Gaps to external range liquidity. When the market hits external range liquidity, you can look for the market to come back down to internal range liquidity. So next, we're going to talk about time-based liquidity. Time-based liquidity is the high or a low of a specific range in time. We're going to be using a daily candle, so the previous day's high or the previous day's low. You can watch how price interacts with these levels to see what the current bias is.
Speed this
For
up
example,
a bit.
if the market pushes under the previous daily low and it does not close beyond it, then it's likely to go to the previous daily high. Anytime that you're anticipating a reversal, like for example, if we look here, the market came under that previous daily low, like we said, and it failed to displace, so we're looking for the high. So that gives us a reason to look for a reversal. So in examples like this, you'll look for market maker models. Now, market maker models are going to be a set of 3 consolidations or 3 ranges down to your overall target where you think you're going to reverse from, which is that previous daily low, and then the market.
The boogeyman is the market maker. Like, the market maker is there taking their little tiny position out. You know, it was the market maker. These market makers are crazy. These market makers, market maker. So this, I saw Tom Hougaard. Tom Hougaard is the author of Best Loser Wins. Tom Hougaard said in a video, people, retail is only a small percentage of the overall volume. So people like blaming market makers for their retail order is ridiculous. And but what it is just plain and simple. It's just everybody has their stop loss at around the same area. That's it. And they all get stopped out. We see this in small caps a lot. A lot of short sellers stop out at the high a day, and they stop out in the pre-market highs. This is for another video, by the way. But like, what you do is you just scale in differently, so you don't have your stop loss where everybody has their stop loss. Whoever's saying have your stop loss in one area, like, guys, everybody, let's have our stop loss here. That's a recipe for disaster, and you should run the other way. You know what I mean? Get out of that community, run the other way. Maybe join the Friendly Bear University. Teach the exact way that you should actually think about these things to give you a high probability for success, instead of getting blown out and then blaming the market maker, which is ridiculous. And these guys love to blame the market.
Once it starts to push up, this is what you call a smart money reversal. Now, the highs at each one of these small consolidations can be targeted whenever you're trading within a market maker model, with the end goal being that previous daily high, which is the high of the first consolidation. So with market maker models, you want to make sure you're always looking for them in context. So for example, on a lower time frame, when the market was trading down to this fair value gap, there was probably a lower time frame market maker model because it made sense to, since we're expecting the market to reverse. Section 2 of price is market structure. First, we're going to talk about your impulse structure. So as the market is pushing very abruptly, like we form a low here and we have a big move to the upside, that is going to be an impulse. So we expect the market to continue through these impulses. Now, let's say if we have an overall higher time frame move that is a very large push to the upside. Well, on the lower time frames, there's going to be a lot of downwards movement. If you're just stuck on the lower time frame, you might just see bearish price action. But you have to understand, once we go into a discount of a bullish range, these lower time frame ranges are likely to be violated, or these lower time frame impulses, because it's going to play out the overall higher time frame narrative. Now, the same goes for a bearish impulse of price on a higher time frame. The lower time frames will have to be bullish on the way up, and they will likely reverse once they are at a discount of the higher time frame impulse. This can also be paired with order flow, which we're going to talk about in just a second, and also can be paired with fair value gap. So let's say if there was a higher time frame fair value gap and you're at a premium, then the lower time frames are much more likely to reverse. Next, we're going to talk about manipulation and displacement, and this is how you make sure you're drawing the proper market structure. Notice how in this example up here, the market barely tapped up above this high. So we look at that as a manipulation because it didn't really push through. Now, if we look right here, that's going to be a displacement because the market pushed an energetic leg through that low. So that displacement, we're expecting for the market to continue. So anytime we have a displacement, we're going to expect a retrace, often into internal range liquidity, like we talked about, and then the market is going to go where? Down to external range liquidity. See how you can pair these concepts together to get higher probability setups. And if we look over here, the market is failing to displace or manipulating this low, and then it pops up and displaces through this high. So that tells us the market is bullish, because if we displace, we're going to get follow through. And if we're manipulating lows, then the market is likely bullish. So when the market is bullish and we're engulfing these down close candles to that.
Yeah, That's not the case, man. It's not that easy. Right? Trading is definitely not as simple as some social media gurus pictured it in a 30-second TikTok video. You won't become rich just by learning support and resistance on some chart patterns. If you are ready to treat trading seriously, I would recommend my trading broker, Cobra Trading. Cobra is an advanced broker specialized in supporting short sellers and high-frequency day traders. It offers extensive short selling inventory for traders to hard-to-borrow stocks. I personally connected my DOS Trader execution platform with Cobra to ensure the best order execution speed. As someone who recycles shares a lot, I managed to keep my trading commissions low because Cobra's special limit order rebate routing, REB25. By placing limit orders to REB25, I can get reimbursed on my trading fees while getting filled at the most ideal prices. If you have decided to take your trading to the next level, you can check out Cobra Trading using my link to get additional sign-up bonuses, including access to Dilution Tracker, Trade Ideas, and Ask Edgar. Certified Market Technician. Can traders become profitable trading the chart only with no tape reading, no news, research, no statistics, no level 2? No, they cannot. You need all that information. You want to be a pro at this game, and you have to do what the 5% of successful traders are doing. And what are the 5% of successful traders doing? They're doing more than just a 13-minute video. Well, I guess there's a lot of 13-minute videos. They're talking about the same stuff over and over and over. You're looking at different forms of information. You're looking at, your tools, back testing, statistics, data, and studying under someone with a track record and a reputation. So these guys, they never have that. They just never do. And if they do, it's probably fake. It's not like a real third party auditing, which is what we need. But yeah, you do need to do tape reading. You need level 2. Today I traded a stock and I was seeing the level 2, how it acted right before it's about to halt. But this is small caps what I trade. So it's like I'm looking to see like where the iceberg order is, where the likely hidden order is. Is that a real order? Why doesn't it move past the price? It just keeps hitting a resistance. Maybe that's a hidden order. That's a huge block order that we don't know. So it's like is it a bluff? Is it so I need to know a lot of different things. It's not just look at this candle here, look at that candle there, liquidity here, engulfing this, whatever. It's a lot more to it than that. And with stocks, with trading stocks, especially small caps, I have a lot of information at my disposal, which gives me increased odds. I'm a fundamentals-based and statistical-based trader. So with fundamentals, I'm looking at dilution. I'm looking at the headline. I'm looking at, what's driving, is the sector moving? Is there, what? There's a lot more things to go by, which increases edge.
The upside after taking liquidity, that is going to be called a change in the state of delivery, or a CISD. So in this example, we took out a set of equal highs. Now something else I want you to pay attention to is that these were also time-based. This was the previous daily high. And like we said, if the market is failing to displace above the previous daily high, the draw on liquidity or the target is like...
I want to see the track records, man. Let's get some third-party auditing or something. Why don't these guys ever show that? You'll never see it. You'll never see it. It's like, so I don't understand. So people just blindly follow these guys? I just don't get it. Because we in small caps, we have several ways to get like some form of track record, like real track record. And, people show it. Not everybody, but people show it. These guys, you'll never see a track record. It just doesn't exist.
Likely to be that previous daily low. So on the higher time frame, this is what it looked like. Just like that example, we talked about time-based liquidity, market failed to close beyond that low. So then you can hop into the lower time frames and look for a change in the state of delivery. So anytime this up-close candle starts to get engulfed, after we're expecting a reversal, that is going to be a high probability that this candle is going to be used as resistance. So what this is called is an order block. Order block should only be used after they take out a key point of liquidity and when they are aligning with your higher time frame bias. Now, let's talk about the most important part about ICT, which is the relationship between time and price. And this is really what makes ICT unique and can give you pinpoint accuracy if you understand it. The absolute most important concept of ICT is the power of 3. The power of 3 says that whenever we have an opening price, this could be the opening of a week, a day, or a session, that we're going to likely see accumulation. And let's say if you're bullish, what you want to see is a manipulation and where we sweep out all this liquidity and then a reversal under that time-based liquidity and push to the upside. Okay. So these reversals right here are where you're likely to see SMT.
And don't get me wrong, technical analysis is part of the game, but it's not it's not the whole bread and butter, you know what I mean?
Let's take one more look at some examples for entry models. As we said before, if you're trading into a higher time frame key level, that is a bonus. Now, on this example, higher time frame key level was just a 15-minute gap, and you were sweeping out liquidity and failing to displace. Then you can go to the lower time frames and look for a market structure shift. So in this example, the market structure shifted up. Again, you can just mark it on this close if you like, and you can target out the draw on liquidity, which is right up here, or you could have waited for the market to trade down to a fair value gap, which we had one right there, and got a little bit better risk reward. Now, this will result in you missing trades sometimes, but that's okay. At the end of the day, we're trying to get good at trades. So again, another thing you can do is, like, let's say the target is super high and you're a newer trader and you don't want to go with this high risk reward, or you have trouble holding that. As long as you get a decent win rate above 50%, you can just trade with a 2-to-1 risk reward, which is not hard to get, as you can see.
So these guys, like, when they lose, they don't blame it on their like lack of knowledge. They blame it on, like, you know, I need more discipline. It's my psychology or something. No, it's none of that, man. This is just all bad strategy. Get out of this. It sucks. It doesn't work. You're following a guy with no verification. He has no track record. So it's not your psychology or whatever. Just get out of there. It's all bad. You're studying under a furu. Okay, so my final thoughts there, that is an absolute waste of time. I didn't learn anything. There's nothing new I learned. I was thinking, man, maybe I'll learn a little tiny technical analysis thing. Maybe maybe he'll say something good with technical analysis. But yeah, there's nothing good here. And, you know, with this video, we know there's 200,000 people that subscribed. They have bad mentality. And I already know the archetype of the person that subscribed. It's probably someone that is not good with finances and is looking for like a way to, you know, make money quickly. They're not even looking to get like financially educated. They're looking to just what can I do to make money quickly? Okay, this thing goes up, goes down. Basically a gambling. You might learn a couple of things about Japanese candlesticks because, you know, the case of you can learn something from anyone. Okay, you can learn a little bit of technical analysis, like 0.5% of technical analysis. You can learn what an engulfing candle is, and you can learn, you know, but then when you start to blame the market makers, these evil market makers, how do you undo that? How do you undo, like, I need to make $100 today. I just signed up. I watched a 13-minute video. I need to make $100 today. I deserve to make $100. I deserve to make $100 every day, especially when my account is $20 and I can use 100x leverage. How do you unlearn that? I mean, attitude and mentality is everything. That's why professional athletes, you know, it's like when they draft the NFL or whatever, basketball, they, like, attitude is a major part of like who they're going to draft out of high school or college or whatever. And in college, the #1 recruits, I went to the University of Florida. Go Gators! The #1 university for sports. You know, the most Olympians ever. I think they still hold that record. But like the University of Florida is like, when the athletes get recruited for there, a big part of it is attitude and mentality. Anything substantial that you're going to do in life, and especially trading, you have to have the right attitude and the right mentality. And if you're coming in with a hyena-like mindset of like, you know, this attracted to this garbage, it's all bad. You know, you're not going to succeed. I'm telling you that. Like I told you about that example of the guy doing Forex. He's not here with us today. But he did waste like a few years of his life, and he thought he was being productive. And I'm sure when he went to the club, because he did go to the club, he would flex that like he's a Forex trader. You know, it's like, it's stupid. It's like, we're here to make money, not to flex, you know, to people that don't know, you know, to flex some certain vocabulary like he is, you know. I bet he can talk to his buddies, his bros, and he seems like a boss. Actually, he's got 200,000 subscribers, so he is a boss, you know. In his eyes, he's probably like, man, I'm the man, you know. But like 200,000 people got attracted to this guy, wasting their life away. Can you believe that? What do you call it? Albert Einstein even said, insanity is doing the same thing over and over again. And that's what these guys are doing with no results, or, you know, no improved results. And that's all these guys. If you guys like to see more reaction videos like this, please comment who you want me to watch next, or link me to the video that you want me to react to. If you're serious about trading the right way, check out my latest price action trading tutorial here. It will improve your chart reading techniques a lot.